Welcome back to KTM Investing. If you're investing in 2025, these 5 stocks could be the difference between just surviving and building serious wealth in the next 5 to 10 years. They're underpriced and overlooked. And right now, institutions that are aware of the growth potential of these stocks are loading up while the crowd looks the other way, and they tell everyone the stocks are either a hold or a sell. But as we always say, do as they do, not as they say. In this video, I'll reveal 5 brutally undervalued stocks with massive upside potential you need to know about before they skyrocket. Before I dive in, let's set the stage. 2025 is no ordinary year. We've got high interest rates, political tension, and global tech disruption. Whether you are new to investing or a seasoned investor, this is your shot to spot opportunities in the market that have the potential to give you tremendous returns on your investment. Real investing isn't about reacting to yesterday's news. It's about anticipating where capital is moving next and investing in solid companies and technological advances that you can identify and see that there is tremendous long-term potential, regardless of current market conditions and regardless of the current stock price. So let's dive in. Our first stock pick is NIO, ticker symbol 9,866 on the Hong Kong exchange. If you want to avoid the American depository shares drama, Hong Kong-listed NIO shares are the safer bet. You are shielded from political rhetoric and will avoid any threats of delisting by the US. Currently, over 204 million shares are shorted right now, and that's a prime short squeeze setup. NIO's battery swap technology, EU expansion, chip spin-off business, and rising deliveries in China and the rest of the world make this EV maker a quiet giant in the making. There is currently a lot of focus on weekly registration numbers coming out of China for the company, and investors seem to be locked in on only those numbers. However, have you noticed that you do not see any numbers of overseas sales? The weekly registrations are only for cars that are sold locally, so that is not an accurate indicator of cars sold in the other markets where NIO currently operates. This is where NIO has the most room for improvement, and where the CEO, William Li Bin, has been placing emphasis, because in 2024, NIO only exported roughly 1,083 vehicles for the entire year. This is why the CEO is extremely confident that by gaining traction in foreign countries, they will become profitable in the 4th quarter. NIO is currently sold in 11 countries, which means they sold less than 10 cars per month in each of those countries last year in 2024, and by switching to the conventional dealership model, where dealerships first purchase the cars from NIO and then sell them to customers, NIO will see a surge in sales. Since that change, NIO has now been able to sell more cars en masse to the overseas market in 2025, and those numbers will be reported in the 3rd quarter of this year, along with revenue generated from partnerships and licensing deals. NIO has not disclosed the 2025 numbers since the change from using NIO houses, but prior to the change, NIO had only delivered approximately 400 vehicles in the overseas market this year. The change has now given NIO a well-needed boost, as the dealerships overseas have to place their orders and purchase inventory for their storefronts, which gives NIO capital upfront and instantly changes the sales projections. Dealerships are now also incentivized to advertise NIO vehicles using local commercials and sales tactics that they know will work in their markets, which alleviates the burden of figuring out local markets for NIO, which tremendously increases its odds of being accepted within the target market's ecosystem. It is also worth mentioning that the CEO has given guidance that they expected to deliver between 72,000 and 75,000 cars for the 2nd quarter, and despite the naysayers on Wall Street, NIO actually delivered 72,056 vehicles, in line with the CEO's guidance. So if you want electric vehicle exposure, NIO definitely should be on your radar, as the CEO is steadfast in his forecast of achieving profitability by the end of this year, and for good reason. Number 2 is the MCHI, the iShares MSCI China ETF. This ETF gives you exposure to Chinese giants like Tencent, Alibaba, Meituan, and BYD, all in a single ETF. MCHI is undervalued, it's institutionally favored, and it's poised to rebound as China stabilizes. If you're cautious about single stock risk but want Chinese growth, MCHI is your best move. The third is SCHD, the US dividend king. In a volatile market, SCHD is your shield. It's loaded with dividend-rich giants like PepsiCo, Lockheed Martin, and Texas Instruments. Whether you're reinvesting or looking for direct income, SCHD delivers strong yield and growth stability. Stock number 4, BYD, ticker 1211 on the Hong Kong exchange. This isn't just Tesla's cousin. It's Tesla's biggest global competitor, and they have outsold Tesla globally consistently in the past few months. BYD is backed by Warren Buffett, and they are dominating EV exports to Europe, Asia, Africa, and the Caribbean. It's profitable, scaled, and ready to expand even further as Chinese production becomes even more attractive, innovative, and efficient. And number 5, KGRN, the iShares MSCI China Green Energy Index ETF. This ETF gives you exposure to the beating heart of China's green tech revolution. Top holdings like XPeng, BYD, Li Auto, Cattle, China Yangtze, Power, Leapmotor, CGN Power, Kingdee International, NIO, and China Resources Power are all in. These companies are backed by Chinese policy and global climate trends, making KGRN a strong play for 2025 and beyond. Now here's what most people won't tell you. If you only invest in US stocks, you're missing over half the opportunity. Delisting risk is real. Inflation eats your returns. And waiting for perfect timing? That's how most people miss wealth-building moments. You need global exposure. You need to think ahead. So these 5 picks are actionable, but timing is everything. Due to economic conditions, US investors are running to safe havens, and China is injecting fresh stimulus to boost their economy, so these names could start to run fast. Subscribe to KTM Investing now and stay ahead of the next breakout. Comment your favorite stock pick below and share this with one investor who needs to see it. Thank you for watching, and we will see you in the next video.